quarter theory.
Okay.
We'll learn more on the whole number prices. Quarters are whole number prices used by market makers to reverse, and they also give us entries, so forth and so forth. By definition, a quarter is one of four equal parts of something. And quarter theory focuses on the 1000 pip range between major whole numbers in current exchange rates. And then it divides the 1000 pip range into four equal parts. We call it, the four equal parts are termed large quarter points. So from one large quarter point to the other lies 250 pips. It's a 250 pips range. And here's an example. So we have the 1000 pip range from this red line to this red horizontal line. And you see these prices. This is 1.100 to 1.200. So these prices are called major large quarter points, and in between we have 250 pips ranges from 1.10 to 1.125 to 1.15. So 1.15 is the half point from this quarter to this quarter. It's called a major half point, but it's also a large quarter point, and we have the 1.175. So the numbers that mark the beginning and the end of each large quarter are given termed as large quarter points, and the one which coincide with the major whole numbers are called the major large quarter points. So apart from the 1000 pip range, we can also divide the 100 pip ranges between two whole numbers in currency exchange. And we divide the 100 pip range into four small quarters. So there will be like a 25 pip range, and they are termed as small quarter points. So we have here, this is a major small quarter point, this is a major small quarter point. So this is 1.08 to 1.09. And in between, we have the small quarter points, which are 25 pips ranges. So the small quarter points that coincide with the whole numbers are termed as major small quarter points. They represent critical junctions that signal the end of the previous and at the same time the beginning of the new 100 pip range. So the exact middle point is also called the half point of the small quarter point. Now, quarter theory is based on the premise that daily fluctuation of currency exchange rate are not random. So the fluctuation is in an orderly manner between one large quarter point to the next. And the quarter theory proposed that every significant price move in currency exchange rate takes place from one large quarter point to another, and this is in a gradual increment of 250 pips, which is the range between these two large quarter points. So basically, the large quarter points serve as constant support and resistance levels. And if you have it in your templates, so you can get a clear, see a quick and precise price analysis, because you can simply see there's a support level there and there's a resistance level there. And a bullish breakout above a large quarter point is expected to target the next large quarter point, which is above it. and a bearish breakout below, a large quarter point is likely to challenge the next large quarter point, which is below it. And we say that a large quarter point is completed when the 250 pip range is completed. So we see this is EURUSD daily time frame. So these are large quarter points, the horizontal lines. You can see clearly how price is going from 250 pips to the next. Now, the quarter theory also divides each large quarter into 10 equal parts, and these are the small quarter points of 25 pips. Now, the fluctuation of the 250 pips range also takes place in an orderly manner of a gradual increase of 25 pips. So 25 times 10 will be 250 pips. Now we have these small quarter points which coincide with the large quarter points. Like after 10-25 pips, you get a 250 pips, and that will be a large quarter point. And here is an example of a successful completion of a large quarter point and a successful completion of a large quarter point. You can see we had a large quarter point at this level and to the next. So price bounced around the large quarter point here, and we have a 250 pips range. When it reached here, it showed a sign of weakness to go down, and it came all the way to the half point. So it did not complete the 250 pips range here. So this is an unsuccessful completion, and we had another. So if this occurs, we target the next large quarter point up. So it came all the way to this large quarter point. Now, see, there are times when these whole number prices can be registered as high, low, open, or close price, exact whole number price. But most of the times the market is volatile and has a tendency to conceal these large quarter points, making them difficult to recognize. So you see a breakout up, or sometimes it does not reach an exact whole number price. So in periods of high volume and volatility, prices may move beyond the exact number of the large quarter point. And we, when price does that, we say it produces an overshoot area above the large quarter point. And in periods of low volatility and volume, we have what we call undershoot area, which is below large quarter point, a few pips short of the exact number of the large quarter point. So overshoots and undershoots occur not only around the large quarter point, but also when price moves target whole numbers or important support or resistance level in an attempt to produce breakouts, because price usually produce breakouts around this support and resistance point. So an overshoot and an undershoot area lies 25 pips above a large quarter point and around 25 pips below the large quarter point. So quarter theory designates the range between the range of one small quarter of 25 pips above a large quarter point as an overshoot area, and the range of one small quarter of 25 pips below it as an undershoot area. And in a bullish price movement, and you see that price did break above the large quarter point up to 25 pips and stay there. We call it a bullish overshoot. And in a bearish price movement, when price surpasses up to 25 pips below a large quarter point and stays within the range of the overshoot area, is considered to be a bearish overshoot. So here we have, see, we had a large quarter point here. So this move here is an overshoot area. So overshoots should be recognized as warning signs of unsuccessful large quarter transition. So when price stays within the overshoot area, that should be a signal that the transition from one large quarter to the next won't be complete. And this causes price to remain within the previous large quarter. So you see price reversing to the previous large quarter. Now we have important levels as price goes from one large quarter point to the next. So when price breaks one large quarter point, the first target should be the overshoot area, which is 25 pips above it or 25 pips below it. And by reaching that number, we look for a sign of weakness when price stays within that range and forms a sign of weakness that it may reverse. Then we know that there is successful quarter transition. But we have the hesitation zone. The hesitation zone is the range of 75 pips above or below the large quarter point. And 75 pips simply means the first three quarters of 25 pips range above each large quarter point. So the second target should be the hesitation zone. See, quarter theory uses this hesitation zone to identify successful or failed large quarter transition. Because when, if prices stay confined within this hesitation zone, it can prove to be a difficult area of support, a difficult support or resistance level to overcome. And it may prevent further progression of price beyond the range of the hesitation zone. And this will lead to unsuccessful completion of a large quarter. So hesitation zones, and in the charts, hesitation zones are marked, they have dotted lines. So we have a large quarter point here, 75 pips down is the hesitation down. We have a large quarter point here, 75 pips up it, above is the hesitation up. And we have now the half point, which is an exact, this is 125 pips range. And this should be your next target after the price has broken the hesitation zone. So when price reaches the half point, also it can be a difficult support or resistance level. And you can see that price may not overcome it, and that will be unsuccessful completion of the large quarter point, and you'll see a reversal from there. Now we have learned of the overshoot, the undershoot, the hesitation, and the half point. Now, what should we look for in price when we are incorporating the large quarter, the quarter theory with what we have learned previously? We should look for small price corrections or consolidations may be expected in the vicinity of the whole number prices. So when price reaches large quarter points and major small quarter points, you should expect for price to consolidate or you may see corrections, like price going down. You see a retracement there. And also, large quarter points act as support and resistance points. So close attention should be put when prices reach this level. Now we look for sign of strength, and sign of strength simply means price sustaining up at or above a large quarter point. And this is only possible when the market maker cycle is not complete. See, when price reaches the large quarter point and the cycle is not complete, you see price showing sign of strength break the large quarter point. And we also look for a sign of weakness, price remaining below a large quarter point. And this is valid when the cycle is complete. And that adds a very good confidence that price will reverse there. And as the market trends, along the market maker trend, a break and a retest on this whole number prices serves as entry points. So you should also look for that. So along the market maker trend, you see a break and a retest around this whole number prices, and they serve as entries, especially the small quarter points. Also, these price levels can also serve as targets for take profits. Like you see that there is a certain large quarter point, and it's within the cycle, and you have your entry there, so you simply know from this point to that large quarter point is around 200 pips, it's around 250 pips, so you put your target there. And in higher time frame, you see if the large quarter point is also support or resistance point in higher time frame, then you see price extension to meet these price levels. So if at all price extensions, if at all a large quarter point is an area of support or resistance in higher time frame, for example in the weekly, then we know that the market would seek to find these levels in order to change the market structure from bearish to bullish and all that. So you see price extension to meet these price levels. So we have a question here. What if prices actually break above or below a large quarter point, and you see a transition into a new large quarter point? Does a large quarter transition mean that the new large quarter will be successfully completed? If at all price breaks it, does it mean that the break into a new large quarter will be a successful completion of that large quarter point? See, the quarter theory recognizes that large quarter transitions do not guarantee the successful completion of the new large quarter. And we monitor price behaviors around the 3 points that we have learned. There's hesitation zone, the half point, and the overshoot and the undershoot areas. So the whole number preceding a large quarter point, that's the 25 pips range. So the 3 important price points can serve as major support and resistance point and may prevent further progression and may cause unsuccessful completion of large quarter point. So sometimes when you're doing your analysis, you can simply target now that if prices bounce to this large quarter point, then I expect maybe a retracement to an area of undershoot or to the hesitation zone, and this happens a lot around the hesitation zone. So we have a few flashcards here. So the cycle was completed around large quarter point here, and you see as the delay is accumulating. So this is a sign of weakness, though we know that now the cycle is complete and the dealer is forming a peak, and the whole number price here, the large quarter point, is it's giving us another confluence of a good peak formation. And this accumulation is around 75 pips range. You can see it.
Mm.
And here we had a peak formation around the half point. And you can see this rising wedge went all the way to the hesitation point. And eventually, you see a reversal there. You see after breaking this hesitation zone, there is a retracement there. Even the half point, there is a retracement. The large quarter point, there is a retracement there. So you should expect for the break and the retest. And here we had another example. I see peak formation was around the hesitation up. And I remember at this point, the cycle is complete, but then price extended. You see the extension was further down to meet this large quarter point down here. See, it did break this hesitation zone. So this is a sign, according to the quarter theory, that we should have a successful completion of the large quarter point. I mean, of the large quarter. So the next target should be the large quarter point below, or if it's the hesitation up, should be above it. And we have the half point here as it adds to the confluence to this pattern here. So we had a blue tracer, we had the blueberry, and we had the half point. So this add to the confluence that this is a good area to take entries. Okay, I had a very good 3 swipes here and a 22 pattern. The timing is session changeover. So this was a very good trade to take. So that's how I apply the quarter theory. And on the templates that we have this template called SPV, TPL, SPV template with the quarters. And this is used in the majors and the crosses, and the SPV ETPL is used with the exotics. So the SPV.
Sorry, I don't have those templates. The TPL.
I know.
Okay.
So the SPV TPL have this is the small quarter points. This is a major small quarter point. See the line is a bit thicker. We have the hesitation zone. We have the large quarter points, the hesitation zone. We have the half point here. So you can clearly see even this top band here. Yesterday we had this top band was around this large quarter point here. The safety here was, yes, this was yesterday on EURUSD.
It respected the 800 EMA.
Yes, and we had the blueberry there. See, the downtrend is still very strong here.
Yeah.
So that's all I have for today. And I'll share with you the template.
Okay.
Thank you for listening.
Thank you so much, boss.
I'll tell you the time to meet tomorrow, okay? Because around 8 will be check time.
Okay.
Okay.
Okay. Thank you so much.
All right.